Now, in 2023, gold demand, excluding the demand from over-the-counter, fell by 5%. However, including that over-the-counter demand, markets and other sources, demand grew to an annual record. This was largely driven by geopolitical and economic uncertainty, boosting the demand for the yellow metal. This, according to the World Gold Council's latest gold demand trends report. The Council's John Reade joins us to unpack the findings of the report in greater detail. John, thank you so much for your time today.
Thank you.
John, help us understand the dynamic between, with demand, looking at what includes over-the-counter demand and what excludes it, and the different, outcomes that we saw there.
Sure. No, it's an important topic and one that I've found myself explaining quite a lot in the last 24 hours. We measure demand across all aspects of the gold market. So jewelry demand, obviously a very large component, central banks, which have been very large buyers in the last 24 months or so, technology, a smaller component, and the various measures of investment. But there is a segment of investment that we can't count, we can't measure it, and it's called OTC demand. And the reason for that is because those are transactions that take place between individuals or companies or funds directly with investment banks to buy the large gold bars that you may remember from various films like Goldfinger. In fact, I often call this James Bond bars of gold because they're the big ones, not the small retail bars that you might see in the shops. So when this sort of buying takes place, it's very difficult to measure it accurately. So we have to make a number of estimates. We also rely a lot on market intelligence, gossip really from the market and our contacts around the world. So OTC buying has been a big part of gold demand in 2023. We've seen reports, credible reports of strong OTC buying taking place earlier in the year in Turkey, but also in the Southeast Asian area where I've had multiple meetings on multiple trips with family offices, high net worth individuals about buying physical gold and storing it in a vault somewhere where it can be safe from potentially confiscation or bank failures, etc.
It's very interesting dynamic there. So, help us unpack what we are seeing there, because, of course, we also are seeing a record demand, and I think that's an important aspect. It does tell us of a world that is trying to make its way through a lot of uncertainty.
Yeah, I think you're right. Record demand for gold, despite the fact that the price is at a record high. One of the things that you can say is if you stand back from the detail and just look at the overall picture, the fact that jewelry demand, for example, unchanged year on year, despite the increases in the gold price, that's showing that there's an underlying, really healthy element of demand for what is normally a very price-sensitive sector. The biggest story in the last 18 months, though, has been central banks buying almost as much in 2023 as they did in 2022. And both of those years above 1,000 tons of central bank buying out of a gold market size of just less than 5,000 tons. That's a big number. And it's more than 500 tons more than their average purchases since the global financial crisis. So central banks have accelerated their purchases of gold. This, together with OTC demand, has been the reason why we've seen overall demand for gold hit an all-time high in 2023.
John, help us understand the dynamic then with the gold ETFs, because they haven't enjoyed as much, a demand. And I'm wondering if that means that investors are more hungry for the actual metal itself and, not necessarily anything in kind.
No, I don't think that's so much the case. I think the buyers of physical gold are quite different from the buyers via exchange-traded funds. People who trade gold via ETFs have a securities account, have a stock market account. And I think that they have been attracted to two things. In North America, I think they've been attracted to a strongly performing equity market. And in Europe, which is the other area where we've seen light ETF selling, I think the return of an interest rate where you can put your money in the bank or in a fixed income product and get a yield really for the first time since the global financial crisis has made it tough for the gold ETF market. And I think we've seen quite a lot of profit taking there from European investors who are looking rather to earn a yield. So I think the dynamics between physical gold buyers and exchange traded fund gold buyers are quite different. And certainly the higher interest rates has played a role, I think, in weakening ETF demand over the last 12 months.
Let's also touch on China. I think we've touched a bit on North America and Europe. Let's talk on China, because I think that's an important part of what we're seeing happen with gold around the world.
Yeah, very much so. I mean, it's probably the one market where, if you look at year-on-year comparisons, there was still a lot of COVID impact back in 2022. You may remember at the end of 2022, China was effectively locked down everywhere and then came back, opened up very fast in 2023. So I don't think it's a surprise that we've seen positive demand stories coming out of China when you're looking at year-on-year comparisons. But there is something else going on there too. Aside from just COVID, we are seeing strong interest in jewelry demand and even stronger in investment demand for gold. And I think if you look at what's been happening with the Chinese economy there, weakness in real estate, a weak stock market, concerns about still high economic growth, but perhaps not as fast as people are used to in China. I think gold is gaining attraction as a consequence, particularly when you throw in local currency market weakness as well. So the weaker RMB obviously driving the local gold price up in China, and potentially, I guess, gold investors expecting more of that to come. So look, China is the biggest gold market in the world. Its economy isn't doing brilliantly at the moment, but gold is doing well there, probably in contrast to pretty much every other commodity. And certainly, if I look at the volumes that are trading on the Shanghai Gold Exchange on a daily basis, January started off really strongly as well. So running into the Chinese New Year holidays, which are a key buying season, looks like gold demand in China is going to be strong, at least in the first part of 2024.
Well, John, that's all we have time for today. Very fascinating insights. Thank you so much for your time this afternoon. It's been fantastic. That was World Gold Council's John Reade.